Hello, my name is Stacey Mankoff, and I'd like to welcome you to the 31st edition of the Bellringer. And I'm delighted to welcome Josh Frank with us today. He's the CEO of the TIE, and we're going to be talking about how to convince traditional financial institutions, or TradFi, to invest into the crypto space. Crypto, blockchain, DeFi, all this new technology. Now, Josh is the co-founder and CEO of the TIE, which is the leading provider of information services for digital assets. The TIE services hundreds of the leading institutional investors via their terminal offering and API solutions, and provides investor relations services to leading token issuers, as well as redistributing data feeds into crypto exchanges and platforms. Prior to co-founding the TIE, Josh helped SS&C Technologies build out their post-trade settlement business. And I'd like to welcome Josh, who I met a couple of weeks ago at a Crypto Mondays. Josh, welcome.
Thank you for having me on. I appreciate it.
Terrific. I'd like to start the conversation, since you're very experienced in the space, as to what you're finding are the main objections which you have heard from TradFi when it comes to investment in this space, and what you think needs to be done.
Yeah, I mean, I don't know how much there's an objection to crypto itself, more so the ways to access and get exposure to crypto and the ways to manage your risk getting exposure to crypto, right? At the end of the day, crypto is very interesting if it's an uncorrelated asset, right? Investors are looking for, other assets in their portfolio that, don't move like the NASDAQ, but also don't move like gold, right? And I think crypto presents a really interesting alternative. And if it's an asset class that can be uncorrelated, it's very interesting, right? So what are the challenges? The first is we need sufficient liquidity, right? There needs to be enough trading volume, but importantly, that liquidity can't be on offshore exchanges that are being sued by multiple branches of the US government, of which many offshore exchanges are, right? So
currently, yes.
Yeah. So institutions need trusted exchanges that they can interact with, that they can do business with, and they want multiple different venues that they can do business with. They also need custody, right? And they want to make sure that their assets are safeguarded. The challenge with crypto is today we have a situation in which most of the crypto native custodians don't have real balance sheets, right? I mean, by don't have real balance sheets, I mean, yeah, they have 20 billion in user deposits, but they only have 25 million or $50 million in cash. It's a huge risk. What if are they insured? What if something happens? What if they get hacked? They're not backed by the US government,
right? Or anything like that.
Exactly, right? And so, you look at in the traditional custody space, right? State Street and Boney Mellon and others have actually built out crypto custody offerings already. But the big challenge is, and it's something that people are not talking about, I've been talking about it for a while now, is something called SAB 121, which was a staff accounting bulletin posted by the SEC, which basically said that for a traditional bank, a publicly listed bank, to custody crypto, they need to have equal US dollar collateral for all the crypto that they're custodying. That's insane. That means that you're foregoing 5% yield on treasuries to earn, let's say, 20 to 30 basis points custodying crypto. And so it's made it actually impossible. Even though Boney Mellon is live with crypto custody and has a very small amount of clients, they obviously don't want to scale that up because every billion in custody they have, they're losing a couple $1 million, right? So it's not
profit making for them.
It's losing money, right? So they can't do it, right? So institutions want Boney Mellon to be custodying, but the SEC isn't allowing that to happen, which is funny because the SEC's job is to protect investors. And I think there's no better way to protect investor assets than let them hold it at Boney Mellon versus some shitty offshore crypto exchange, right? And so that's another challenge. Another challenge is risk management, right? And it's getting, it's mitigating your risk with your counterparties, right? That's a huge part, which custodians you're choosing, which exchanges that you're choosing, and things like that. But it's also, getting notified when there is, some sort of massive risk to your business, an exchange and a network has an outage, an exchange goes down, something happens. And so, it's not just about, it really just comes down to risk management, right? At the end of the day, institutions need to make sure there's enough liquidity. So if they enter a position, they can get out of that position. Their money is not going to get hacked. They have multiple different venues that they can trade on, right? And so for institutions, it obviously depends on the institution, right? It depends if we're talking about a hedge fund or a venture fund or an asset manager or a pension. It really depends who you're talking about, obviously.
Right.
At the end of the day, it comes down to look, if this is an asset class which is uncorrelated to other asset classes that has sufficient liquidity that you can trade in a trusted manner, it doesn't matter if you believe in the underlying value proposition of crypto. It's interesting, and that's where we need to get to.
Right. And right now, I mean, do you feel that the tide is changing because of what BlackRock has come out with?
Yeah, I mean, I think,
and if you could just reiterate to our listeners what BlackRock said.
Yeah, so I mean, BlackRock has gone out and filed for a spot Bitcoin ETF, which is a really big deal, right? A spot Bitcoin ETF is important for a few different reasons. And by the way, this is we're 10 years into applying for spot Bitcoin ETFs. Gemini applied for the first one in 2013. So this is not, a new concept or a new idea.
Not but it's BlackRock
but it's
Gemini.
BlackRock, which is, got a track record of winning 99.99%. I think they've won 530 or whatever, applications for ETFs, and they've lost one in the entire history of BlackRock, right? It's BlackRock that managed the US government's money during the financial crisis, right? So it is BlackRock, which is the world's largest asset manager. It is a really big deal. And the reason that it's a really big deal is, one, they have a trusted brand, right? Or the most trusted brand, I think, in all of asset management, or at least certainly the most well-known brand. And on top of that, the reason that an ETF is really interesting is because BlackRock wouldn't be filing for it unless they had the demand for them from their clients, right? They're not just going to go and all of a sudden file for an ETF because no one was asking about it, right? They must be having pensions and endowments and sovereign wealth funds, right? Clients of Aladdin and their other offerings, that have trillions of dollars in assets, with BlackRock asking for exposure to this asset class, which I think is really exciting. And on top of that, it makes it just significantly easier for people to hold Bitcoin in their retirement account. And every investment advisor is offered or is familiar with iShares products. Now, just like they're offering iShares S&P products or iShares Gold products, they're offering iShares Bitcoin products to their clients. So, what does that mean? That means that there's going to be a lot of buying demand for Bitcoin in the long term, not in the short term, right? I'm sure the product, if it gets approved, it needs to get approved. But if it gets approved, we'll have, billions of dollars in initial demand and hopefully tens or hundreds of billions of dollars into the future. But your question was, how does that impact everyone else?
Right.
I think it gets people to start asking questions, right? And it gets senior executives that were maybe, previously skeptical or uninterested to be like, oh shit, if BlackRock's taking this seriously, our clients are going to start asking us questions. And so I would say it's been a mixed bag so far. I think,
it's the FOMO effect almost.
It's exactly what it's, FOMO, right? So I think it's been a mixed bag so far, right? Where some people are like, nah, still no.
Right.
Others are like, shit, we need to get our stuff together really quickly. And so I think it's a mixed bag. It's going to take time. Not everyone's going to react to it, but I think, over time, the largest asset manager in the world coming into the space is a huge deal. And I think if they go out and they attract 50 billion or 100 billion in AUM on the fund, everyone is going to be jumping into the race. The challenge with an ETF is it's really first mover advantage. It's basically whoever moved first, as we saw with BitO, which was the Bitcoin futures ETF, they get the majority of the AUM, and then it's a race to the bottom on fees, right? So what's happened after BlackRock filed is everyone filed at the same time, right? You saw Fidelity filed, a ton of other asset managers and crypto native institutions as well filed, right? Because at the end of the day, whoever gets approved first, they kind of get all the AUM right away. And then everyone else, the only way you compete, there's no differentiation on these products really, is on fees. And so it becomes a race to the bottom. So, I think, I think we kind of have our set of applicants now. And then it's going to come down to, okay, if they scale really quickly, I think other people will apply, or we'll look for other crypto related solutions. But I would keep in mind, this is Bitcoin and not all of crypto.
Right. Okay. I got that. I want to talk about the future of crypto and all of this in the United States, because there seems to be in the regulation legislation area kind of a, well, obviously a negative type of view of it. And will there, I mean, what do you see for the future in the US? Best case, worst case? And, do you see more growth outside the US in these spaces?
So that's kind of two questions there. The first, at the end of the day, the US is the biggest market. The US is where what has invested billions and billions and billions and billions of dollars in crypto so far. It's what's driven a lot of the industry. With that said, I think Europe is starting to take crypto seriously. They're actually creating regulatory frameworks for crypto to operate, understanding that crypto is unlike traditional equities or other securities.
Is this the MiCA?
It's not just it's MiCA in the EU, but the UK is also presenting its own set of regulation. That's being promoted by their prime minister. But we're also seeing similar things in Hong Kong. We're seeing similar things in the Middle East, in different countries. And so I think we will start to see more activity outside of the US, but you want the US. Like, you can't say you don't want the US to be in crypto. The US is the wealthiest country in the world, right? And so, yes, crypto can continue to exist without the US, but you want the US. So what do I think is going to happen? It's a very difficult question to answer. I think the Ripple win is mega important because it just creates a lot of momentum and excitement and energy within the US. And I think, people are going to fight back now against the SEC, seeing that Ripple is able to win. So I think that's a huge deal. I think the best and worst case scenario depends on who's president in the next election cycle. If it's Biden as president and he keeps Gensler in office, I think that's a different outcome than if there's a different president. But it also depends. Look, if the court rules that Gensler is overstepping his grounds, it's not a security, what's he going to do about it, right? So I don't know. I mean, I think realistically and pragmatically, we have a long way to go. I think we're going to continue to get pushback. I don't think we're going to get Congress to approve or do anything. And the challenge with Congress is anytime any bill is presented on anything, somebody on the other side of the aisle decides that they want to put some other random thing that has nothing to do with that bill into that bill. And
pork.
so
lots and lots of pork.
It's impossible to get anything passed, right? And so do I think we're going to get like a full crypto regulatory bill passed? I don't know. And the reason I also don't know is I'm not convinced that there's any congressman who cares that much about crypto that they're going to like go through all of the effort. Maybe there's a couple, but there's not like, it's not like out of everyone in Congress, there's like this majority of people that really have this incentive or care that much to get this thing over the line. And the second somebody starts pushing back and putting bullshit that has nothing to do with crypto in the bill, I'm a little skeptical on that side. So I think it really does come down to who's in office and what the courts are ruling. Right now, the courts seem to be ruling in favor of crypto. I would say, broadly speaking, I'm excited and more bullish about the regulatory environment in the US now than I was a month ago, but I think it's the easiest thing ever to say given Ripple. But we'll see. We'll see. I mean, I think in the long run, though, crypto is going to be welcome in the US. Maybe it's not this president, maybe it's not the next president, but I think in the long run, just like we saw with semiconductors, right? Semiconductors got pushed out of the United States to China. China started catching up, taking the lead, becoming a probably trillion dollar business, semiconductors, right? And now the US is going, oh shit, we have to start building semiconductor plants and catching up. I think the same thing is gonna happen with crypto as well. I mean, remember, this is $1 trillion asset class that was yes, it's not really a trillion, it's not really liquid for $1 trillion, whatever. My point being is a $3 trillion asset class at its peak. It's significant in size. There's billions invested. There are dozens of publicly traded US crypto companies. There's all the miners, there's Coinbase, there's others, right? There are billions of dollars at stake here, and billions of tens of billions, hundreds of billions in eventual tax revenue. The US will get itself organized. It's just a matter of, who will get itself organized. And I will note, even within bodies like the SEC, yeah, Gensler doesn't like crypto, but Hester Pierce certainly is a supporter, right? I mean, the SEC's got 5 commissioners, 2 like crypto, 3 don't. You flip 1 and the whole situation changes, right? So I think it's important to note that, yes, there is regulatory scrutiny, but it's not everyone.
Well, Josh, thank you so much for your insight on the subject area. I know there's so much more we can say, and we hope to address this in future dialogue, either at another Bellringer or at the After the Bell events. I'd like to thank you all for listening, and I'll see you next time. Take care. Bye-bye.